Today we're looking at intangibles, and there are a number of ways that one can acquire an intangible. The first, which is the most common that we will see in this study unit, is when we purchase an intangible. You can acquire a right by buying it from somebody, a purchased intangible. We also have intangibles that we generate internally. So we can develop our own recipes, our own these things are coming out horrible. We can develop our own recipes, our own technologies. Those are intangibles. We also can acquire intangibles through government grants. If you think about the toll roads, the people who operate those toll roads got given by government, isn't it, the right to operate those toll roads. In exchange for certain conditions, they have to build roads and maintain roads, but then they're allowed to charge tolls. We also can acquire intangibles, which you've seen if you've done groups in business combinations. In business combinations, we acquire intangibles of the subsidiary. The one that we see most commonly is probably goodwill. So those are all ways in which we can acquire intangibles. In this module, we're going to look at these two, purchased intangibles and internally generated intangibles. And maybe we should start with definition. What is an intangible? The statement defines an intangible as an identifiable non-monetary. The only reason that they put the non-monetary in is because all our monetary assets are financial instruments, so that's not so important. An identifiable asset without physical substance. So the one, I think that the two pieces of this rather that are fairly obvious is the asset. Asset comes from framework, and in order for us to recognize an intangible, we first need to meet framework requirements. An asset is a resource which is controlled by the entity from which we expect future economic benefits to flow. And without physical substance is the one that we accept with intangibles. That is what an intangible is. It's something we can't touch, isn't it? Intangible, we can't touch it. But the important part of this definition is actually this one, identifiable. And what the statement says is that for an intangible to be identifiable, we need to meet two conditions. It needs to either be separable. And when they talk about separable, they talk about an asset that we can separate out from the rest of our business and from which we can sell or cede to someone else or use separately, separable. So, for example, when you give Telkom your telephone number, they take those lists and they sell them, like to all the insurance people and all the people that cold call you, isn't it? Or MWeb or Vodacom. So those lists of phone numbers and people's names are separable. They can be sold out. It's an intangible. Or otherwise, it needs to be a contractual agreement. And often when we purchase intangibles, it has a contractual agreement. And often when we develop our intangibles internally, they're separable, isn't it? So usually that's the connection. So it's important, first of all, that we are able to identify our intangibles. And in order to fit the definition, we must make sure that we, first of all, meet those. In terms of recognition is the same as framework. And it's the same as everything else we've looked at with assets. It needs to be probable, and it needs to be measured reliably. We'll come back to that measured reliably story, because that's often the problem that we have with internally generated intangibles. How do we measure it? So, for example, the Coke brand. How do we measure what it cost Coke to develop their brand? It's almost near impossible to measure that reliably. Do you agree? How do we measure it? It's impossible to measure reliably. If McDonald's introduces a new burger, how do we measure that intangible, which is that recipe for that new burger? How do we measure that reliably? So often, internally generated intangibles can't be measured, like Vodacom's customer lists, because it's impossible to reliably measure what it cost Vodacom to get that list. Do you agree? So what you'll find as we progress is that these internally generated intangibles, most of them we actually are not allowed to recognize, isn't it? And in fact, if you look on the right-hand side of your note, you'll see that it says there, internally generated brands, mastheads, titles, lists, etc. should not be recognized as assets. So actually, therefore, internally generated cannot be recognized. There is one exception, and we're going to look at the exception a little bit later, and that exception is research and development. Research and development. And that's the only exception. So you'll see that at the bottom on that page number 2, you'll see also at the bottom there it says, other types of costs must be expensed. Internally generated goodwill, pre-opening or pre-operating costs, training costs, advertising costs, relocation costs. All those costs we have to actually write off. And the only internally generated costs that we are allowed to, or the only costs that we then are allowed to recognize as intangibles, are the purchased ones in terms of a contract, and then the internally generated only research and development, and we're going to talk about that in more detail. All right, so definition, recognition. We then move on to measurement. So when we look at measurement of intangibles, initial measurement, strangely enough, is where all the work is with intangibles, initial measurement. And again, we're going to differentiate between purchased intangibles, and purchased intangibles is all direct costs, isn't it, of acquisition. And remember, this is an intangible, so your costs are also, again, likely to be things like legal fees, drawing up contracts, isn't it? It's not going to be physical costs of, if you buy a license from someone overseas, the minute that's all legal, you can start trading with their stuff, isn't it? So all direct costs of acquisition are included in purchased intangibles. Research and development, which is our only internal intangible that we have, there are some specific rules. The first rule is that research we expense. And the reason that we expense research is because it doesn't meet the probability criteria. There is uncertainty if there will be probable future benefits at the research stage. I'm only still researching whether it's possible to run a car on air, pure air. So I don't know whether it will be or won't. Those probable future benefits that will flow are just too uncertain. Yeah. Let me actually put there probable future benefits and a question mark. So R&D, research piece, we expense. Why? It's not that we can't measure it, because we can measure it if it's research. We can actually go and see who did the research, what costs we incurred doing that research. It's because the probability of the future benefits is not there. So therefore, we can't recognize an asset. We have to expense it. With the development piece, we are allowed to recognize as an asset. So the development piece, we recognize as an intangible. And we recognize all direct costs incurred in the period of development up to ready for use. And this is important. It must only be direct costs, not allocated overheads. So we can't say, oh, we've allocated an overhead, the MD's salary. We took the MD's salary and we allocated it across all departments. So development, R&D department also got an allocation. No, that's wrong, isn't it? Rent, if you can say they occupy so many square meters of the building, then that's a direct cost, isn't it? That's not allocated. So all direct costs related to development can be included. But there's some rules. There's some criteria. How do we know then when we've got research and when we've got development? And so how do we know when it's research and development? There's criteria that need to be met. Criteria to distinguish between research and development. Research to development. Okay. And they're there in your study, in your handouts on page 2. The first criteria is that it must be technically feasible. Technical feasibility. So, is it something that's even possible for a car to run on pure air, oxygen? It must be technically feasible. It must also be commercially feasible. So, for example, it is possible to fly into space, but is it ever really going to be a business opportunity to take normal people like you and me into space? Yeah, in terms of the cost versus what we can get as revenue. Commercial feasibility. So for a project to be viable, it needs to be technically feasible and it needs to be commercially feasible. In other words, technically, from the engineering and the science point of view, I must be able to do it. Can I go and take people up to space? Yes. Is it commercially feasible? Will I make money from it? Will there be future benefits from it? Probably not, isn't it? I don't know. Richard Branson seems to think otherwise, isn't it? And there's that other guy as well, wanting to put people into space. And then we must have the intention and the ability to complete. So there needs to be an intention on management's side to complete this project, to take the development up to the point where we've got a product. And not only must there be an intention, but there must be ability. And when we look at ability, it's a number of things that we've got to look at. We've got to look at whether we have the expertise, whether we have the resources, isn't it, to do this. So here we're looking at resources, and we're looking not just at money, but we're looking at expertise, money, the right people. Will we be able to complete this project? Yeah. And then the statement talks about intention and ability to complete. And then number 5, which is not such a major one, but it then says that it can be for use or for sale. So there are companies especially in areas like pharmaceuticals, that all they do is research. Like if you think about universities, isn't it? The science departments at universities, the students that are doing PhDs and masters, that's what they're doing, is research, isn't it? If they hit something good, they then sell that research to the pharmaceutical companies who then make it into medicine that they distribute and sell. So some companies, all they do is research, and then they sell the products they come up with to other people. Some companies do their own research to then to continue those products for themselves. So how do we know when it's research and when it's development? Because I said to you that research we must expense, but development we can capitalize as an intangible asset. We have to meet these criteria. For your purposes, you'll be told. They will say to you, on this date, the criteria was met. So what you can see is important when we're looking at research and development is a timeline. A timeline is very important. It's important to get your year. Your timeline always has your year first, isn't it? End of year, beginning of year. Then it's important to understand, when did research start? Maybe research starts there. And maybe by the time they get here, they have met the criteria, and now development starts. And then maybe by the time they get here, it's ready for use. So we need to establish months, isn't it? Maybe there was 1 month, because maybe that started in Feb, and then maybe there were like 3 months of research, and that needs to be expensed, and then maybe there were 6 months of development that needs to be capitalized, and then maybe there are 2 months where the asset is now ready for use. Yeah? And it's important that you understand exactly what happened, why, and how. Because if there's an expense like rent, which would have been incurred for the entire year, you need to apportion it. You need to figure out how much goes in research, how much goes in development, how much will just be an expense in my P&L, a normal expense, a rent expense, in other expenses. Okay? So that timeline is critical to understand what happened when. Okay. So if I go back here, we were talking about initial measurement. Initial measurement, purchased intangibles, all the direct costs to do with purchasing that intangible, what I paid for it, if there's any forex or any legal fees, etc. incurred. Research and development. The research piece I expense, the intangible, the development piece I recognize as an intangible. What costs do I recognize? All direct costs to get the asset ready for use. Those direct costs, remember, I'm developing it myself, are internal things in my business. It's things like salaries. It might even be depreciation. If I'm using certain machines to develop, then the depreciation of those machines, isn't it, gets capitalized. It could be depreciation on equipment, computers maybe, or machines. If you think of a lab, there's lots of technical equipment in a lab. The depreciation on that equipment must be allocated to research and development, isn't it? It could be overheads like rent, water, electricity. Just be careful with the allocated ones, because a general sort of allocated overhead, that we wouldn't incur. It's not direct enough, isn't it? It's an expense you would have incurred anyway, even if you weren't doing any research and development. Hey? So we must make sure that only the ones that are being incurred because we are doing the research and development must be included. And then the question arises, how do I know when it's research, when it's development? Once the criteria is met. You'll be told about the criteria. So it's important to make sure you have a timeline so that you can figure out the months and what happens when. Just read carefully. Sometimes they'll tell you there's an expense incurred during research and development. In that case, in this example, if they said to you the expense was incurred during research and development, then the expense is actually being incurred only for these 9 months, isn't it? And then the split would not be 3/12, it would be 3/9, 6/9. If it's an expense that's incurred the whole year. So let's say they employed someone specially for this project. They only paid him while we were working on the project. So he was only employed for 9 months. Then the split is 3/9, 6/9. If it's a cost that gets incurred the whole year, like a depreciation on an equipment, then it's 3 over 12, 6 over 12. Okay, be careful with that. Then, subsequent measurement. Subsequent measurement for intangibles is similar to PPE. We determine, there are two models allowed. Let's start there. We're allowed to use the cost model and we're allowed to use the reval model. However, very, very seldom we use the reval model. The reason that it's seldom used is because it is not possible to establish reliably the fair values of intangibles. So if I say to you, what is the fair value of the eToll license? Who knows? Does it get bought and sold regularly? No, isn't it? So intangibles are, there's no market for an intangible. Therefore, it is not possible to determine fair values reliably. Therefore, fair value not reliable. And because fair value is not reliable, most of the time we cannot value intangibles using this method. In South Africa, I can only really think of one intangible that you maybe could measure at fair value, and that's fishing licenses. Fishing licenses are given every year, isn't it? And can be traded. In fact, all the indigenous fishermen along our coast that get a license land up selling their rights to the big fishing companies. So it is possible with fishing rights to determine the value because they get traded and sold regularly. But really for nothing else that I can think of, there would be a value. So therefore we land up using the cost model. In the cost model, we have something called amortization. And amortization is over the life of the intangible. And this is the one exception that we haven't seen before in PPE, is that with intangibles, an intangible can have an infinite life. They call it an indefinite life. Example, goodwill. Goodwill does not get amortized, isn't it? Because goodwill doesn't have a life. We can't say it's 5 years or it's 3 years. So some intangibles don't have a life. They have an indefinite life. If they have an indefinite life, then there's no amortization because it's forever, isn't it? But usually our intangibles have a life and we would amortize over that life. We also would have a residual, but again, for this same reason, the fact that we really don't buy and sell intangibles, residuals are usually null. So amortization of intangibles is fairly straightforward because there's a null residual, and usually there's a fairly shortish life. The other thing with cost model, I'm just going to continue it over here, is impairment. And impairment is what we dealt with when we looked at IAS 36. And it's the same rules that we did last time. And in fact, the examples that we practiced last week were intangibles, weren't they? So IAS 36 deals with impairment. So the cost model is exactly the same as PPE. It's what was PPE's cost model? Cost less depreciation less impairment, isn't it? Here it's cost less amortization less impairment. It's just a different word for depreciation. It's not an amort table. It's just a different word for depreciation. Amortization is over the life, and this is the only exception, is that it can be an indefinite life, in which case there would be a zero amortization. And then we also look at residual, although the residual is usually null. So that's subsequent measurement of intangibles. And then we see often with intangibles this impairment story. Impair, reverse impair, it's the stuff we did last week. And then in terms of disclosure, we have disclosure in 2 bits. We have a PBT note, and in that PBT note we will disclose our research cost as a separate number. We will also disclose the amort and any impairment. And then we have an intangible note. In the intangible note, it's similar to the PPE note, except it's now for intangibles. And we can also have different classes of intangibles. So I could have an internally generated intangible, development, and I could have a purchased intangible. And they would just be 2 different columns, just like we have with PPE if it was machinery and vehicles, for example. So it's similar to the PPE note. It's a movement note, opening balance, closing balance, and it's also got accumulated amortization. It's very, very similar to the PPE note. And there's one additional disclosure, and that's that we have to disclose remaining life on an intangible. Okay, so that is intangibles. It's not really massively new except for this development, but it's really just the development piece is really just an apportionment of costs. Do you agree? All right, so in your study guides, there's an example 3, Lancelot. No, that's not the one I want you to do. Let me just see it. Okay, I can just go through this one with you quickly. There's one that I want you to do which is more complicated. An entity, Lancelot, page 165, developed a new computer package for internal use. The following expenses package. So they developed computer software. Computer software would meet an asset definition. Do you agree? It's a resource which is controlled by the entity which has future economic benefits. So computer software does meet an asset definition. Is it separable? Can I sell it out to somebody else? Yes, I can. Is it non-physical, intangible? Yes, it is. And this is the expenditure that was incurred, January to November, and then 1 December to 31 December, and then the next year, January to December. So it was done over 2 years. It says, on the 1st of December 2010, proof was provided that the software met the criteria to be recognized as an intangible asset. So what it means is that for this period, up to the end of November, it's research, and then from 1 December, it's development. The recoverable amount of the package, including future cash flows to complete before it's available for use, is estimated to be $50,000 on 31 December 2010. At 31 December 2010, this was the development number, 10,000. Yeah. At that year end, that would be the number that would be sitting in intangibles, and 90,000 would be expensed, P&L. They say to you that the recoverable amount at that date is 50. I'm not impaired. Do you agree? I'm good. And so therefore, as at that date, there's no impairment, and I carry it at 50. Then I carry on the development, and by the time I get to the next year end, my total development costs are now 210. I incurred another 200,000 Rand of costs in the next year. Total development costs 210. My intangible now would be 210. But they say to you that the recoverable amount for December 2011 is only 190. So therefore, I have to impair it. Oh, sorry. I have to impair it by 20 to get it down to the 190 carrying amount. Yeah, and that's just an example. Let's see what they say. The computer software is recognized as an intangible of 10 at December 2010. Expenditure of 90 is recognized as a research expense and will never form part of the cost. The computer software is recognized as an intangible of 190 as at 31 December 2011, which is the 200 plus the 10 minus the 20 impairment loss. The impairment loss can be reversed in subsequent periods. If the next year I find that it's gone the other way, I can go and reverse that impairment loss. Yeah. All right. But this is the big example that I wanted you to look at. It's called HedgeCo. HedgeCo. And the reason that I want you to do it is because it's a whole big argy-bargy story. You can see, look, it's a whole page of information plus a whole page of information, 2 pages of information about the research and development activities of this company. These are the research and development activities. Up here, they talk about them. Oh, it starts at the top. January 2011, they started research on an electronic component for motor engines. 1 March 11, they submitted a report and the directors were positive about the component and approved further development, which commenced 1 March 11. The accountant found that development costs component satisfied with the criteria for recognition. So 1 January 11 to 1 March 11 research, 1 March 11 criteria is satisfied, isn't it? So we can start development. 1 June 11, they started research on swimming pool pumps. The research progressed well, and at the end of December 11, they were optimistic that this would be a material asset. Being optimistic is not good enough. We need to meet the criteria, isn't it? There's nothing there about meeting criteria. They employed 4 engineers, 2 worked full-time, and blah, and only 1 engineer worked on the swimming pool. So there's a whole story with 4 engineers. You have to figure out which engineers worked where on what. Then they also employed 2 lab technicians and 3 technicians on the swimming pool, 2 on the engine and 3 on the swimming pool. There were consumables allocated of 42 and 25. Consumables is actually things being consumed, isn't it? It's chemicals or materials or whatever it is. The fact that it says allocated doesn't mean it's an allocated cost. It's actual consumables that were consumed. Depreciation is allocated. All other applicable costs are incurred on a time basis, on the time engineers spent. So the costs are as follows: for the 4 engineers, for the 6 technicians, admin personnel, lab maintenance, consumables, water, electricity, and services. For me, it's looking like the admin personnel I'm going to ignore, but I think everything else I probably will include, right? Consumables, maintenance, and water and electricity is costs that were incurred because I was doing R&D. Admin personnel is costs I was incurring not because I was doing R&D, it's just salaries that were incurred. R&D equipment, so we use some equipment in the R&D, cost 3 million rand. It was purchased 1 January 11 and it's written off straight line. Some of that depreciation must go to research, some to development. Here is how it was used, the equipment. So from January to March, it was half used in the research of the engine. From March to August, it was half used in the research of the motor. From June to December, it was half used for the swimming pool. The rest is just a P&L expense. Yeah. Careful with the months, they overlap. Then, for the commercial production of the motor electronic, HedgeCo bought specialized plant and machinery. The specialized plant and machinery will be sold for 150. You can ignore this specialized plant and machinery for now. Because this is PPE, do you agree? And it's got nothing to do with research and development. It's once we start commercial production. So that can only happen after development is finished. Okay. So there will be a PPE note in the solution, but I don't want you to focus on that right now. Projections for 2011 for the sale of the motor component are as follows. There's the projections of the units that we will sell of this motor engine. The company had no inventories on hand. With the preparation of the financials, there were indications that the recoverable amount of the material costs of the development costs was impaired. And they give you net profits, and they give you a cost of capital, so you have to do a calculation of impairment. But I also don't want you to do that just yet. It's the policy to amortize on basis of units sold. So we're not amortizing it based on years, we're amortizing it based on units, those units up there. Okay, but what I want you to do for B is I want you to have 3 columns. You can work on the desks if you like, or in groups. And I want you to have research of the motor engine, development of the motor engine, and research of the swimming pool pumps. And I want you to take the costs that they gave you. Remember, there are costs for technicians, engineers, and consumables, and maintenance, water and lights, electricity, etc. And there's depreciation. And I want you to take those costs and I want you to apportion them. Because I want you to tell me how much is going to go into P&L for that, how much is going to go into my intangible for that, and how much is going to go into P&L for this one. Okay? So that's what I want. Totals for these 3. And I want, I don't want you to check their solution. I want you to see if you can figure it out. Yeah? There's no point in looking at their solution. I can also audit a solution. Anybody can audit a solution. So this is what I need to do. I need you to work through this information. And the starting point, for me anyway, is a timeline with the months. Yeah? We're working with 1 year end. The year end is December 11. And the required just said, disclose the above mentioned information in the notes. But I want you to just do the workings for me for now, as at December 11. So for the year, December 11, you need to just do a timeline first with the months. And then once you've done a timeline with the months, I want to see this information. I'm going to do a timeline at the bottom as well. Pens? Okay. I've got some. Give me, how many have you got? 1 of each? 3. Give me the ones that you've got doubles of. I've got some more, yeah. No. I think I've got it. You guys can also work together if you like here on this desk. You're going to work with Phil? Yeah. Divided by 4 because it's 4 engineers. How did you get the 195?
Because it says the 2 of them only work from Jan to March.
No, they didn't work from Jan to March. They worked the whole time. They only worked on that project from Jan to March.
But now, don't you allocate
The engineers worked the whole time. 4 engineers are employed. They work full time. 2 worked full time on the research and development. This is the cost for the whole year. Costs incurred for the whole year was 780. So just take 780, divide by 4 to get 1 engineer, and times by 2 months. How did you get your 195? Did you assume that? Did you work out how many months that was in total, and then?
We divided this by 4 and then we times it by 2. 2 engineers work full time.
Yes. Okay.
Engineers,
Yeah. Divide and then you times 2 over 12.
2 by 8.
No, 12. 12 months. Because they've worked full time, the engineers.
Didn't we stop allocating costs when
But he still gets paid. He got paid for the whole year. It's just that he was only working on that project for that time. The rest of the time he was doing other things.
the rest of the time?
The other amount will end up in P&L.
So should we put it here?
No.
On the model?
No, you got it times by 2 over 12. That expense for that engineer for the whole year. You'll see when you get to the labs. Yeah, the whole year. Yeah. That one is for the whole year, and the lab is also for the whole year. The consumables, you'll see, consumables were only incurred through the period worked on the project. So that one you'll divide by 8. We stop allocating, but you want him to allocate the whole 780. Look, there are 4 engineers, do you agree?
Yes.
They worked January to December. Over here for these 2 months, 2 engineers worked.
That's right.
The other 2 engineers, what did they do?
They were doing other stuff. They were not
Okay.
working
Then,
on that.
okay. When the project finished here, where were the engineers? Doing other stuff.
Yeah, but
So,
not on this research and development.
but maybe on other research and development stuff.
Oh, I thought we were allocating it directly to the...
The 780 is the cost of 4 engineers for the whole year.
So we need to basically calculate
What needs to be allocated, but that cost is for the whole year. That's not the cost just for the 8 months. Otherwise the number gets all confused, isn't it, with how do you split it then? Because this is 2 engineers for 8 months, and then 1 engineer for 7 months, and the other engineer for 4 months. That's what you did. No, you also didn't do that, isn't it? No, just assume that that's the cost for 12 months. No, it didn't go on for 12 months. It went on for 2 months, 6 months, 7 months. She's got the months there. But you're going to say 2 over 12, not 2 over 8. I said, if it's a cost incurred for the whole year, we will use 3 over 12, 6 over 12, 1 over 12, 2 over 12. So in this case, if this was this case, these salaries, the first month of salaries would just go into P&L. Then those 3 months would go into research. Those 6 months would go into development. Those 2 months will go into P&L. But you're trying to divide by 8 and not by 12. Then I said, if there are expenses which are only incurred during that time, not for the whole year, then we divide by the consumables. You'll do this, but the salaries you're going to do that. Okay, because you're trying to go 2 over 8. That's where you're making the mistake. 12 over 12, and then 7 over 12 will be the other one. Okay. Yeah. Yes. Yeah. For the swimming pool. Yeah, one guy worked for 4 months and then the other guy worked for 7.
Where did you get the other guy?
There, just read there where it says swimming pool. It talks about 2 guys. It talks about one guy who worked on the whole time and one guy that only worked from the end of the motor. So they did work there.
Of the 4 engineers employed by Maverick, 2 worked full-time on research of development of the motor engine until commercial production commenced. Eventually,
You'll see that once you've allocated your things for the months, there'll be money that's not allocated. It's not going to add up to the 780 because that other time they were doing other stuff. They might have even been doing, I don't know, normal production stuff, isn't it? They're engineers, so they could be working machines in production, doing anything. Okay.
After production, the motor engines commenced that, and then the engineer started to work.
Yeah, so one for 4 months and then one for 7 months.
Comes in September, so it's 4 months.
Yeah. One guy for the full 7 months, one guy for 4 months. Yep, that's it. Yeah, that's it. So 195 times 7 over 12 and 195 times 4 over 12. See if you get those numbers up there. Stopped working where? But this one, our year end is December. So he worked from the time that the project started, 1 June, up to the end of the year, 31 December. The other guy only started after the other one was finished, so he only started in September. Do you like it?
No, I don't like it.
Oh, yeah.
It's just
This is what it is. Once we've done this one, I'm just keeping an eye on the time. Because the assignment question is also this.
okay. So we mustn't do administrative personnel.
No. Do you agree? It's just admin. How is that part direct costs of?
But now, wouldn't your water, electricity, and services be split between your admin and your factory?
Yeah, we're assuming that that's already the split. That's already the allocation. What does it say? These are the costs identified
Based
for.
on the time
Yeah. So you've got engineers, you've got technicians, now you've got building consumables. Is that one running out? Let me go see if I can get some more red pens. We need red pens.
Okay, you pull out the numbers. No, let it pull out the numbers. And then you just write it out. Yeah, I'll take this one. And then
Yeah, it's apportioned on the same basis. But you can use
Okay.
months as well. So you can also just use this, to this.
Is that the one we see the lab maintenance and the water?
Yeah, yeah.
let's just use this. Or you can go this one, 9,000 times 2.
All right, I want to debrief. So I think you've had enough practice. Okay, can I just debrief quickly? The important thing was making sure your timeline was right, yes? Research, January to March, 2 months. Development, March to 1 September, 6 months. 1 June to 31 December, 7 months. Research on the swimming pool pump. Then they gave you the information and I just allocated. That allocation can be tricky to try and figure out how does it allocate. But engineers, my cost was 780 for 4 of them. 2 of them worked here for 2 months. 2 worked here for 6 months. 1 worked here for 7 months, the other one for 4 months. There's my numbers. Technicians, 630 was your cost for 6 of them. 2 worked here for 2 months, 2 worked here for 6 months. 3 worked here for 7 months, isn't it? It's just allocating. The consumables I want to touch on because that one was the one that works differently. Consumables was only incurred for the time that we worked on the project. So for the 42, we're going to split it between research and development of motor, 2/8, 6/8, not over 12. Yeah. Depreciation was straightforward. They told you all you had to do was work out the months. So they said a 3 million asset over 5 years, we're going to depreciate. 50% was used in this one for 2 months, 50% in this one for 6 months, 50% here for 7 months. So half of the machine. And then our last one was consumables, the 120. They said you must use technicians to allocate that one. So I just said 65 was the cost for technicians here out of 780, and I just allocated it like that. Here it was 195 out of 780, and I allocated. And here was those two together, 178.75 out of 780. So then I land up with those three numbers. Yeah, I want to show you how numbers pull through in the solution quickly. There's my internally generated intangible, capitalized during the year, Calc 2, 511,500. It would have been nothing at beginning, isn't it? A capitalization in the year. Then there were some impairments, but we don't need to worry about those at this stage. And then I also wanted to show you the PBT note. Here's the profit before tax note. Research costs, that and that, isn't it? You'll see that depreciation is going to be the balance of depreciation. What wasn't allocated is what lands up as depreciation. They say Calc 5 over there. Let's have a look quickly at Calc 5. Here's depreciation. Calc. The total depreciation was 3 million at 20%, 600,000. Allocated was the 50, the 150, the 175. So the rest is what lands up in P&L and lands up in the depreciation line. Yeah. Okay. So you get the feeling, because I want to do the one in the assignment. The one in the assignment is not massive like this one. And in your exam, it's unlikely to be massive like this one. The one in the assignment is a little bit long. Is a research that was commenced 1 November 14. That's last year, hey? And then 28 February, the project leader submitted a report, and he was happy that the criteria was met on the 1st of March. So this is the date of development. Development date, 1 March. No, let me rather use the highlighter. This is research. This is development. The formula was ready for use. Ready for use. There's my 3 dates. Yeah. Following direct attributable costs were incurred evenly from the period 1 November to 31 December. So yeah, it's not the year, right? 1 November to 31 December. Materials, water and electricity. They also consulted with a fuel expert, a professor from the University of Lagos. And he consulted for this period, and that was his charge. Yeah. It looks like it was for development only. Yeah. Not for research. The existing machine during the research and development, the carrying amount of the machine was 120 at 1 December 14, and the useful life at that date was 6 years, and residual value was 0. At 1 October 15, it was ready for use, and it has a life of 10 years. The formula was ready for use, but that matches that date over there. So that's the information. It's not massive, like the one we've just seen. So you're going to draw a timeline, you're going to allocate, you're going to work out how much is research, how much is development. Let's just have a look at the multiple choices, which one it is that we can answer. Number 1 is theory. We did number 1 last time. Okay, which ones haven't we done? IS 36 we've done. IS 38. We haven't done this one, this one. They're asking you how much will be disclosed as research and how much as development, which will be recognized as an intangible. So this will be the result of your calcs. Question 4. How will we treat the consulting fees of Professor Emeka? Question 5. The depreciation expense of the machine that's used in the research and development. How much goes to research, how much to development, how much to P&L? Question 6. The remaining useful life. This one we did last time, hey? No? No, this one we didn't do. It was similar. Remaining useful life of the formula as disclosed in the notes at the year end December 17. The amortization expense. Okay, the rest we had done. Am I right? 7, 8, 9, 10? Okay, so we're doing questions 3 to 6, it looks like. 3, 4, 5, 6. Okay, let's have a bash at that. We have half an hour. You want to see the... There? Okay. So you can manage your own time. We have half an hour. We have to do those 4. I don't know if you want to continue with what you were doing. If you want to do the other one first. But the aim is just for you to feel how it works. Yeah. So the objective was just to get the feel, not to actually do the entire question. But if you are there and you want to check your answers, then... Something is wrong here.
Or maybe it's a 0.
90 can't be 30 because this is such a small number. Yeah, such a small number. There we go. There's your 10. Yeah, you're fine, hey, with all the principles. It's just, okay. All right, so you can do the assignment question on the table too. Let me get you a wipe and then you can clean it off easily. And then you can just take a picture. But it's multiple choice, so you don't need it really, isn't it? But you can take a picture with your phone if you want. It's there. Of this one. You're going to go try it. It's a nice one to try. If you can do this one, then you can do any intangible question basically because it's intense. Okay. I've got wipes. Huh? I do. My kids work on the kitchen table. If your kitchen table is like polished, you work on it. If it's mine is stone, you know, like Caesar or whatever. So or glass. Huh? Yes, even the study desk. Yeah. Okay. Assignment question. More what? There. Okay, it's not so bad. No, you need to go to the thousands. 15,455 is what it needs to be. Because otherwise you won't be, because the number you're splitting is 150,000. So this doesn't add up to 150,000.
This and this.
Yeah.
Oh, we split.
Oh, are you doing raw materials first?
We should have just done it together, right?
It doesn't matter, you can do it like that. But you need to work the rand. You work in thousands. 455, yeah. Otherwise, the answers in the solution are all in rands, not in thousands. Okay.
I think that's it.
I think you'll find you can answer all of them. I'm going to give you 5 more minutes.
Maybe it's just the one here. Maybe it's just these two. This one or this one. No. For the part here. Don't do that. These are writing a code.
Look at the dates. Look at the date.
So basically, just put a star next to it.
Don't add up everything yet because the questions are like all just bits and bits and bits. So go to the questions and see. From what you've got, you should be able to answer them. So go have a quick look so we can check our answers. Well, don't you want to check them? No, it's fine. If you're fine with the answers you have, then you're fine. I'm going to debrief in about 4 minutes. Yeah, just go over it quickly with that and then with a wipe. Just to get the most of it off. Oh, for goodness sake. I was going to say, does nothing come off? Especially green. Green usually comes off easily.
Oh, yeah. Should not have separated them.
No, it's fine. Just add them out quickly. We can even see more or less what they add up to. Add them. 27 about. And this one is about 95. And the green one?
They do more than Spiro, eh? With cleaning up.
Yeah. Wasn't there a green one as well? Oh. Okay. Yeah.
In October, so
All right, let's have a look quickly. It should have looked something like this. 2 months of research up to beginning of year, 2 months of research in current year, 7 months development, 3 months use. Here's the apportionment. 15, 4,555, 15, 4,555, 54,091, 11, 818, 11, 818, 41, 364. In this one, we were apportioning over the 11 months. The depreciation, we were then apportioning over the 12 months. I don't know what it was for last year, but it doesn't seem to matter. For the current year, it's 333 and 11,667. You got all that, isn't it? Consulting was all development. Okay, so if we look at the solution, at the required then, the questions. Question 3, according to the requirements of intangibles, the costs comprising of raw materials and water and electricity, just those first two, relating to research and development will be disclosed as, which one is it? Number 1, 27,773 as research, 95 as development. The remaining piece of cost is in last year. Question, according to the requirements, the consulting fees will be disclosed as 2. The entire amount will be development. It was only from the 1st of March. Question 5. According to the requirement, the depreciation will be disclosed for the research, for the formula, will be disclosed as 5. Yeah. It's the 333 and the 11667. Is it? You didn't have 11667? Because this was 2 months. So 7 months.
Okay, maybe, yeah, it's just an error here.
Yeah, 7 months. So if you just divide this by 2 and times by 7, you'll see you'll get that number. So it was 5. Do you all agree it was 5? And then the remaining life. It had 10 years of life. It was brought into use the 1st of October. October, November, December, 3 months have passed. Remaining is 9 months. It's a disclosable number. Remember I said to you at the bottom of the intangible note. So assignments are done. From next week we're going to start doing past exam questions. And next week we're going to do financial instruments. Huh? We're nearly done. No, sorry, we're not doing financial instruments yet. We're doing non-current assets held for sale next week. Non-current assets held for sale. No, this is only lecture 5. We're only halfway with the syllabus. We will only be finished at lecture 10. Assignment is done. The assignments are both done, for this one.